Joining us now is Disney board member Carolyn Everson. She's also a board member, we should mention, of Coca-Cola and Under Armour. She ran Meta's advertising business for 10 years, 10 long years. And we want to talk about advertising, AI, but let's start off on this fight about Disney. Sarah had Nelson join her a couple days ago. And he's unsparing in his criticism of you directors of Disney. I mean, I guess we can just start off, if you want to take a listen, Carolyn, questioning whether you've been to the parks and whether you know anything about the media business. Take a listen, give your response.
I wonder if the Disney board and the Disney management team, do they know anything about the media business? This company has put forth 5 losers in a row. 5. Think about that. That's a record. I don't know that anybody has put on 5 losing movies with brands like they have, Marvels, etc., in a row.
All right, Disney board member, you want to respond to that?
I actually do. So, number one, I got married at Walt Disney World, which many people don't know. Been to every park around the world prior to becoming a board member. Been on 5 Disney cruises, 2 Disney Vacation Club memberships, and been to Walt Disney World with my family over 50 times. I am as passionate of a fan of Disney as you can get. So, number one, I want everyone to know that the board is extremely engaged, both as a board member as well as consumers. Number 2, Disney had 6 of the top 10 most streamed movies in 2023 across all platforms, and Moana, which we just announced, which is coming out in November for a theatrical release, was the number 1 most streamed movie on streaming in 2023, bar none. I joined Disney's board the day Bob Iger was asked to return as CEO. We did not have a prior relationship. I can tell you my observation, it was a brilliant decision of the board to bring Bob Iger back. He has fundamentally restructured the company. He's laid out his strategic priorities, ESPN being one of them. Of course, we're going to launch Flagship next year, 2025. We're very excited about our live sports franchises. We are refocusing on the creative and the theatrical side. Bob personally is spending a lot more time in partnership with Alan Bergman on that business. The streaming business, when Bob walked in, was losing over $800 million a year ago. And now we lost a little over $100 million. We're well on our way to profitability, which we promised the street. And we have real ambitions to have that be a healthy double-digit business going forward.
Right.
So my perspective is Bob Iger is by far and away the best person to be in that chair. He's got the company on a growth trajectory amidst a lot of change.
A growth trajectory? That seems a bit aggressive. I mean, a lot of it is cost-cutting at this point. And by the way, on that point, Peltz, again, pushing back, both when we interviewed him and when Sarah did more recently, says, yeah, you can have one good quarter. It doesn't mean you're going to have another. I've seen this movie before, so to speak, and they haven't delivered as much as they promised.
We have every bit of confidence. We've cut $7.5 billion in costs, and we will continue to look for opportunities there. We feel very good and positive about the streaming outlook. I believe there's going to be a few streaming providers out there for consumers that are going to win, and I believe that Disney, Hulu, and ESPN are going to be very well positioned on that front. We have obviously reinstated the dividend post-COVID. We announced a share buyback.
But you feel confident as a director that you can continue to deliver on that $7.5 billion of cost cutting and or beyond?
Without question. Disney has always been smart about capital allocation, and we have a fantastic new CFO in Hugh Johnston who joined recently, and I feel very good about our discipline around how we allocate capital.
What about the announcements last week around earnings? Nelson did this cartoon where all the very flattering portrayal of all of you guys throwing spaghetti at the wall, and it was a lot. It was the JV, and it was the Taylor Swift, and it was the $1.5 billion in Epic Gaming, and it feels like, and his accusation is it was about the election, it was about the proxy fight, and that the company was doing a lot of razzle dazzle to juice the stock.
All I can tell you is Bob, when he came back into the CEO role, he outlined strategic priorities for the business. What to do about ESPN and the future of its streaming. He wanted the parks and resorts to be in growth mode across the board. He wanted to reduce losses in streaming and get that to profitability and reinvigorate the creative studio. He's acting on all of those initiatives along with his leadership team. I think the investment in Epic Gaming is a very smart one. I am Gen X. My twins are Gen Z. The switch in behavior between Gen X and Gen Z is extraordinary. Gen X spends about 17% in video gaming time. Gen Z, 32%. Movies, less for Gen Z versus Gen X. So what we're doing is we are responding as a company to the consumer and getting new offerings out there. And as a board member, I'd rather see action. I'd rather see execution and a commitment to reinstating growth than to sit idly by and allow the consumer changes to impact the company's growth.
Can you explain the sports JV? Because it was a big deal when it was announced, but since then, Justice Department might be looking into it. There are reports that the NFL isn't happy and wasn't aware of the venture before it was announced, and that there's some pushback from NFL owners. How's this going to work?
ESPN's mission is to serve sports fans everywhere. And the way we think about it is in the materials we reviewed as a board is we looked at a spectrum of offerings, everything from basic ESPN to the JV with Warner and obviously Fox, as well as ESPN flagship that'll come out in 2025. Right now, as a sports fan, my daughters are college lacrosse players. Every weekend when we're looking for opportunities to watch sports, you're trying to figure out which service is putting what game on. Last night I wanted to see Caitlin Clark, score the NCAA point history, which was incredible. But you have to figure out where you're going to find that game. Our objective at ESPN is to serve sports fans and give them a variety of options at different price points so that they can actually engage. And ESPN flagship, when it launches, is going to have incredible digital capabilities.
What is going to differentiate it from conceivably this new app offering? Because there have been some who wondered what's the need. Fall of 2025, I think, is when you guys are talking about that. But what is it going to look like, again, that's going to allow it to garner subscribers beyond what's going to go to the ability to get so much ESPN programming on the new app?
I would say the difference is the JV is about viewing the sports on the platforms, and the ESPN flagship is about interacting with sports. So think betting, think being able to have social commentary, eventually being able to buy products that you're seeing from your fan base as a fan. So just think of an immersive digital experience. And I think part of it is the market has in their mindset that ESPN is a cable channel. ESPN launched their mobile app, well over 10 years ago. ESPN is a digital sports platform serving sports fans, and we're really excited about the offering next year.